G'day folks, welcome back to Pete's Investing. It's the 9th of July 2024. As you can see here, the SP, the NASDAQ, the GermanDax and the Japanese Nikkei have all risen since our last update. If we go to the heat map and we look at the CCI 150 trends, and you can see here in the bottom left, they're predominantly bullish across all those instruments, with the exception of the GermanDax. It's bearish on the weekly time frame. But otherwise is bullish on the monthly, weekly and daily across the board, and plus some other instruments for your reference. Now in terms of trading, we do look at the trading in the direction of the larger time frame. So if you're trading on the daily, for example, we look at the weekly trend, or if you're trading on the 1 hour, 2 hour, etc., we look at trading on the direction of the daily trend. We enter a trade when the CCI 150 breaks out, has a fresh breakout from the moving averages, and I'll go through some examples of that, and those are also available in the description below should you wish to learn how to draw those on your charting software. And we close out the trade when that CCI 150 breaks back into those moving averages. So again, just always remember to support us more by subscribing and liking the videos. But again, we'll go through some of these charts. So first looking at the SP 500, and on the monthly, we're bullish. You can see there it's broken above the moving average band. But we do have a bearish divergence longer term there between those two peaks on the CCI 150 versus higher highs on the price. We did have another bearish divergence back here, almost a double top on the CCI versus the price. And that actually pulled back and hit our minimum target range of the 23-35% range. And that would have been drawn from that low to that high of the Fibonacci range. Looking at the weekly, we've still got a higher than the moving averages, which is a bullish momentum. You can see there the price is also still moving higher, although we do still have a bearish divergence on the CCI, lower highs versus higher highs on the price. I should move that up to there. And likewise on the daily, we did have a bearish divergence between those little peaks there. It's a bit hard to read that one. So you can see there a bearish divergence, lower highs on the CCI versus higher highs on the price. And if I drew a Fibonacci between that recent low to that high, you can see there it just kissed that 23%. And we always choose that closest range there. We don't trade that, but that's basically what we look at, a potential retrace level. And it just bounced off that 23% and went further high. So that actually executed that bearish divergence. Again, we don't trade the divergence. We look at them as potential exiting of trades. So you could have possibly taken your profits if you were trading on the daily and then re-entered once it started to bounce. Now, if you look at the hourly chart, and we use the direction of the trend of the daily chart here, so we only take long trades. So again, long trades from here on. Now in this case, we had another bearish divergence, but the price did keep rising, so that's still in play, and we expect it. That's why I've drawn a Fibonacci here between that high and that low, assuming it pulls back from there. Of course, it could go higher. Then we're going to see it hit this range in there between the 23-38% level. I haven't set a target for that yet. With a rectangle I usually draw. Until we start seeing it pull back below that moving average range. The price could still rise, so long as the CCI keeps trending downwards. We're going to consider that a bearish divergence. So just be careful of that. The price is making new highs more recently, but again, just be careful of these divergences. The GermanDax, likewise, we've got a bearish divergence here between those peaks on the CCI on the monthly versus higher highs on the price, and it's fluctuating in there for a few months now, just hitting that consolidation up there. And on the weekly, you can see there I've got almost double top. Let me just expand that. You can see there lower highs on the CCI versus higher highs on the price there, and it's actually pulled back, hit our target range, and that was drawn between that recent low to that high, that 23-38% level. You can see it bounced perfectly off that 38%. And I like taking it back Fibonacci to the recent lows, and that would have been the recent low at that point there. So that bounced perfectly off that 38% level as a minimum retrace, and now making further highs on the weekly. On the daily, it's actually broken above as well on the CCI. Now notice here on the weekly we're broken, still in a bearish momentum. So you don't take any long trades until we see this break higher on the weekly. You don't take any long trades on the daily, so just be careful of that. We also did have a bearish divergence here between the peaks of the CCI and the peaks of the price chart. On the hourly chart, again using the daily as a reference, if you're trading on the hourly, we can go long based on the daily trend. So you would have started going long from that point there on the 28th of June, which is back here. And notice here we've got a bearish divergence, lower peaks on the CCI versus higher highs on the price. Again, I've drawn a Fibonacci between that recent low there to that high. You can see there it's hit it quite easily. It's been fluctuating in that 23-38% range for a number of hours now. Just draw that and clean it up a bit. So it's actually hit that divergence. Now notice the CCI is still falling, but the price is pretty much moving sideways. So I'd like to see this break higher, and eventually I'd like to see it invalidate this divergence to be more bullish. But at the moment, carefully going long only in a direction of the daily. But at the moment, the price or the CCI is still falling, so just careful about going long until I see, again, I'd like to see further breaks to the upside on both the CCI and the price on the GermanDax. The Japanese Nikkei, now notice here we do not have a divergence. We had one back here, lower peaks on the CCI versus that on the price. It came back, hit our target area and bounced. And since then, there is no further divergence to talk of. The CCI is moving in line with the price. On the weekly, I have drawn this longer term divergence. And on that basis, I'd like to bring that Fibonacci up to that point there. And also the trend, and that'll raise this target area as well just slightly. So at the moment, that divergence hasn't really started panning out yet. The CCI is dropping, although the price is still rising. So once we see that price start to drop and eventually break below that moving average range, we're going to look out for a target area between that 23 and 38% level on the weekly. Now on the daily, we did have this bearish divergence between those peaks there. Notice lower peaks on the CCI versus higher highs on the price. Broke down, hit our target area, and it's bounced up from there. Now you could argue that's a long-term divergence, although notice the price is now making from that point there. You could actually draw it to that high there. So it's actually making new highs on the price versus lower highs on the CCI. So just be careful. That's still valid as a potential divergence, but again, we're bullish on the daily. On the hourly chart, again, using the daily as a reference, we only take long trades from that point there. So notice again, the CCI was dropping off on the hourly. We had a bearish divergence there. That fell off, hit our target, bounced up from there. And now we've got another bearish divergence happening. So again, lower highs on the CCI versus higher highs on the price. Hasn't actually started to drop yet. But so long as we see that CCI remain lower than that point, we're going to consider the divergence. As soon as that starts collapsing on the hourly chart, on the price chart, then we're going to start measuring a target area. That's still a bit premature to start measuring a target area because it's still potentially making new highs on the hourly chart. And lastly, the NASDAQ, very similar to the SP, new highs on the price chart, although we do have a bearish divergence, lower highs on the CCI. And again, just pulling that up there. We want to see that start pulling back. And I've drawn this little target area, probably a bit early to draw the target area, but you can see what I'm trying to do there. As long as that CCI keeps below that point there, we're going to consider that as a bearish divergence on the monthly. This could take a while to pan out. But again, I'd like to see this break to the downside, and that's very likely if it starts breaking to the downside to hit this target area. On the weekly, we had another bearish divergence here versus higher highs on the price. And I've got a target area there, hit this target previously. This one actually fell to about the 50% level, well below the 23-38% level. And I've drawn another Fibonacci range between that low and that high to that area there. On the daily, that's also a bullish momentum on the CCI. On the daily, still a bullish momentum, although we've got another bearish divergence versus higher highs on the price. And again, it hasn't started falling off yet, so let it run its course and see when it starts falling to the downside before we place any downward targets of a divergence. On the hourly chart, again using the daily as a reference, we only take long positions, but notice the CCI is falling versus higher highs on the price, and So probably avoid going long at this point. You could take these little spikes above, these little scalps if you want to trade those, but again, pretty dangerous. The price is making further highs before it breaks into that. So you would have taken that little profit when it broke above there and close it out when the CCI breaks into that moving average range. So you would have taken that little rise there. But again, as soon as that price starts collapsing, we're going to draw a target on the hourly chart as well. So at the moment, it's pretty much divergence across the board on all the world indices. So just be careful about going long. We could see a bit of a retrace to the downside on all time frames. So again, always caution and try and trade in the direction of the higher time frames to be more confident of a higher probability of success. So if you got value out of the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in a future video.